With us now live is William Lee, Chief Economist at the Milken Institute, former Managing Director of Citigroup. Welcome back, Bill. Good to see you.
Thanks, John.
The last time we spoke, you seemed to me to have a fairly positive view about tariffs as part of a bigger, broader agenda that Donald Trump is trying to put in place. That's in theory, I guess. But here is the Donald Trump reality.
All I have to do is impose a tariff. The more, the faster they move in. The higher the tariff, it's inversely proportional. The higher the tariff, the faster they come.
Is this where the president's belief or his governing style sort of clashes with how the world really works? Because I thought, as a general rule, slowly phasing in tariffs is a better way of doing it, less disruptive or destructive way of implementation, as opposed to announcing 145% tariffs on a country overnight.
Well, John, let's remember that President Trump is trying to restructure the U.S. economy in a way that brings back more manufacturing and more production into the United States, high-value manufacturing in particular. He's also trying to restructure the global trade system in a way that is better for the 21st century trade needs better than what we have, which is a post-World War II institution. And in doing so, by saying that I need to get this done quickly, he is also a political realist. He recognizes that by the time the midterm elections come, attention will be focused on other things. He will lose whatever momentum he has in getting these very important changes through. So he's in a hurry to do this. And as he said, the higher the tariff rates he imposes on our trading partners, the more serious they're going to be in the discussions to try to reshape the trading routes, to reshape the trade agreements, and to have these bilateral deals forged sooner rather than later.
I wonder if the target here is the problem. Because, I don't look at Viet Nam as having ripped off America for the last, 20 years or, an island of penguins actually getting a free lunch. The real problem here seems to be China. And that seems to be what the target should be. This is a communist market-planned economy which is distorting the free market economy globally. And maybe that is where these tariffs should be looked at and should be imposed gradually. And if there's no reform, if there's no changes implemented by China, then the tariffs should progress. Would that be a better way of doing this?
That's amazing, John. We absolutely agree. The real issue is China. And the issue is China has changed the trade system in a way that no longer serves the needs of the U.S., the Europeans, and the non-China Asia. So China really is the problem. So I think what you're asking about in terms of Vietnam and Cambodia and some of these other Asian countries, they become proxy Chinas. They become transshipment centers where they take Chinese goods, relabel them, and then ship them out. What we're asking really is that they become full value-added producers, and then we'll treat them more seriously as a bilateral trading partner. And I think those are the kind of things that have to be negotiated. And having these high reciprocal tariff rates forces these countries to get serious about being honest as to what they're doing in their country and whether or not they're just becoming transshipment points for China.
We also have this sort of on again, off again announcements. There's a pause, there's not a pause, things are exempt, things are out. Listen to the Commerce Secretary on one exemption. Here he is.
These are included in the semiconductor tariffs that are coming, and the pharmaceuticals are coming. Those two areas are coming in the next month or two. So this is not like a permanent sort of exemption.
Yeah, some things are permanent, some are just on delay, some are on hold. If this tariff policy keeps changing, what's the incentive for a long-term investment to rebuild or factories in the United States to make stuff in the US? Because, is the White House undermining the policy here with such a chaotic and unpredictable rollout?
Not at all, John. The White House is very consistent. They said the objective of the agenda that President Trump was elected to put in place was to shrink the size of government to free resources for the private sector, lower income tax rates, lower regulations, and to enable investors in this country to have a marketplace that is free from unfair competition, which is partly what the tariffs are designed to do. And so what you're seeing in the semiconductor industry and pharmaceuticals is a full-scale review as to their strategic nature and importance in the U.S. economy, a recognition that our supply chains have been completely devastated for pharmaceuticals and are highly dependent on Asia for semiconductors. So that review is going to be one where the tariff exemptions are put in place now until we get the full-scale review, and then the appropriate level of protections put in for those particular products.
We also have statements like this coming from President Trump. Here he is.
We had the largest gain in the stock market in history. on every single category last week. That was a nice game because we were getting a little hit because people didn't understand the power of our country economically.
I'm not an economist, but one look at my 401k tells me we are a long way off from making back all the market losses since Liberation Day. This sort of adds to the feeling of almost being, gaslighting happening, like when the White House insists the 90-day pause was just part of their cunning plan all along.
Hey, John, my 401k is closing in on being a 201k, so I feel for you. And
We're in the same boat.
And I think what President Trump is trying to say is that during this adjustment period, we're going to see quite a bit of volatility. If you have some cash, I think he told you, go buy some bargains of companies that are very good. But meanwhile, when the policies are in place and the full Make America Great agenda is put in place of smaller government, lower taxes, fewer regulations, and a protective barrier for our industries, that will enable the U.S. economy to really grow in a way that it hasn't been able to grow before, because it'll enable the fair competition globally to occur. So while both of our 401ks are closing in on being 201ks, I think looking forward, you have nothing but high expectations that the gains will be coming back.
See the paradise of Armageddon. Nowhere in between. Bill Lee, thank you for being with us. We really appreciate your time. Good to see you again. Thank you.
Thanks for having me, John.